so Ember is pretty interesting. We kind of approach investing in a way that most VCs don't. We're founders, leaders, investors, creators, thinkers, and we activate kind of our collective experience and really our network to spark sustainable growth. We provide meaningful insights and solutions that really help companies answer all of their questions and solve problems. We help them, harness capital and, kind of ignite opportunity across the board, wherever that might be. We provide network, knowledge, and capital.
That's awesome. And then what's your key role in that? Are you kind of wearing all the hats right now, or do you have a main focus?
So I sit in our fund, which is that capital piece. And there also we have kind of an alternative model where we provide working capital for consumer businesses. And most VCs are writing a check for equity. We'll provide debt, and then we'll take a piece of equity for kind of that network and knowledge piece, and we kind of earn equity in the businesses that we work with.
Okay, so for someone that's kind of new to this space, this is like kind of like a Shark Tank thing where someone comes to you and says, "Hey, I came up with like a new water bottle idea or whatever," and then you guys what is that kind of what do you guys do with that?
Yeah, that's a great example because Shark Tank is a really good frame of reference for the type of businesses we're meeting. We're in the consumer space, so it's kind of brands and companies that you and I use and know. So water bottle, yes.
It's like products.
It's products. It's like physical goods that we use. So people find us through multiple different ways. We have a really large network, so most of what we're dealing with comes through warm connections, although we have a lot of people that do reach out to us that we don't know. It's called a cold outreach, and it happens. And we just get to know those businesses, and we kind of have our own criteria to look at which ones we want to work with.
So, and I'm just curious, I'm sure it's a revolving door, but how many companies a year do you think you guys, or startups, I should say, forming into companies, are you guys assessing and ultimately deciding if you're going to get behind them?
Yeah, it depends on how you think about it. Like, that's an interesting question because what does it mean to actually meet a company? But in general terms, I think we probably seriously consider several thousand a year. So
oh my
probably...
gosh, I did not expect you to say that. I thought you were going to say maybe 25.
Yeah, no, we look at a lot, and we probably end up doing 1% of the businesses that we end up able to do a deal with.
That was gonna be my next question. I don't know if it's a good analogy, but I feel like, if you're doing a job interview and you're looking to hire someone, you usually know pretty quickly within the start of that interview if they're a good candidate for the job. Do you feel that's the same way when these individuals come in or these groups come in with this concept where you can tell, hey, this is maybe a great concept, but not a good fit for our fund, or maybe it's just not a good idea in general? And how do you approach that?
Yeah. I mean, so our kind of thesis is let's have a wide funnel. We kind of think of it as a funnel. So the top of the funnel, you want to be kind of as wide as possible to make sure you're seeing every opportunity. And then you have different filters that bring that company through that funnel, and it gets narrow. And at the very end are the deals that you actually end up doing. So one of the reasons you might not do it is it just doesn't fit with your thesis, but great entrepreneur, great idea, someone else will go and fund it. Others might be, we just don't jive with this person and we're not going to fund this deal because of that, but the product works. Or it might be the inverse, great product, but we really don't, great person, don't really jive with the product.
Right. Yeah. And that was going to be my next question. I mean, I think you addressed it already. There's the financials of the opportunity where the margins look great or whatever, and it makes it kind of a worthwhile investment for you guys to consider. And then there's the person, right? Or the people involved in it, kind of the intangible portion of it. And of that, I mean, do you have any interesting stories that you're able to share where it may have been a super kind of early on concept, almost back of napkin opportunity, but the people you jived with so well that it was something that your gut and your intuition almost told you to get behind them, and it's been a success story? Anything along those lines you can share?
Yes. Well, so for context, I came out of banking and like high
Yeah, you're the
finance
numbers guy. Yeah.
where and that world, like it's an interesting space to play, but that's where like all of the math matters a lot. And there's a lot of people that are impacted and that are working for, one company. They're working with big companies. So when I got started and I was a junior in banking, I'm just like a little Excel monkey. And I was like, this is not that relational. And I'm a pretty relational guy. Getting to know myself, and I'm like, hey, I like people. I don't like being stuck behind a screen. And that's really where this type of investing is attractive to me, because it's much more relational. And so these businesses aren't as established. And so the people that are involved, it's a speedboat. You can move these businesses pretty quickly. Whereas, large corporation is more like a shipping tanker where you're not going to move that as quickly. So, anyways, to your question, it's highly relational. And you're really trying to figure out, okay, is this a person that's a problem solver? And maybe there's all these other things that could go wrong in the business, but I believe this person can figure it out. So one of the companies we highlight, we got involved with when they were starting their Kickstarter campaign. Didn't even have a website, didn't have a marketing plan. And, Ember got involved. That business is now become $100 million plus business, and has gone on to acquire additional businesses, amongst itself. So we got involved, helped them write a marketing plan.
I'm curious. So you say they pretty much had an idea at this point. Was that an
Right.
example of a warm introduction? Because I can't imagine that's a cold reach out.
Right.
Hey guys, this is a good idea. I'm assuming that they had to have some expertise, the people, and it was buying into them and trusting that they could, whatever their concept was, it would work. They just needed the right resources to be able to do so.
Yeah, exactly. And that's where, us coming to the table with more and a lot of value out of saying, we can help you come up with a marketing plan. We can introduce you to people that will help you get into wholesale. We can, make an introduction to a person that's worked for a large corporate that you're trying to talk to and know how they think. That's where we're really different than, especially most other debt providers, is that we have a huge value-added component to what we do.
So like how, it's probably all over the board, but how developed does that idea or business need to be to like even talk to someone like you?
Yeah, it depends. Like I said, we got involved with them when they were doing a Kickstarter. That's early for us even. For where I sit with our fund, where we're deploying capital and providing working capital to grow, we typically want to see a business that's done over $1 million in sales in the last year. So that's kind of a hurdle rate that a lot of kind of venture firms use. It kind of shows, okay, you have some product market fit. This isn't just an idea. You've gone out, you've tested, there's traction. And so now we can really scale. There's other players that look at kind of the beginning end of that spectrum of, hey, I have an idea. How do I bring this to market? That's a little before where we get involved.
Have you ever, like, kind of on the flip side of Matt's question, have you ever like loved the idea, but you like just did not jive with the founders, and you're like, you guys we can't?
I do have one that comes to mind. I liked the product. I even liked the brand, but the founder was just like not my style. Just like
Yeah.
pretty aggressive. Like, it's interesting in the VC world. There's kind of two modes that a lot of people get into. It's either like, I'm going to make this into $1 billion business and we're going to grow gangbusters and we're going to raise a bunch of money to do it. Or this thing's going to be profitable. I'm going to sell it for 50 million bucks, but I'm going to hold on to a majority of that myself. And it's interesting because at the end of the day, the entrepreneur, depending on how all the math shakes out, can almost go home with the same check. But it's a very different style of how to grow a business and what they're trying to do. I gravitate more towards the let's keep it profitable and scale in a sustainable way. But that hasn't always been, the sexy option in startup culture.
Yeah, and I think that's interesting for you on the fund side, right? Because you have multiple companies you're getting behind. So I'm assuming your portfolio of companies you're investing, you're diversifying, right, on both ends of those strategies. So that's an interesting takeaway. I do have kind of a silly question, but I also think it's important to know in terms of the products that you're seeing. Are you testing these out personally? I mean, I'm sure your house is full of a million different items that you've worn, tried out. I mean, what's that process like for you to get behind it?
It's a perk for working in consumer for sure. And just like walking around, going to, Target, being like, oh, I know that brand, I know those people. Right. And you start to realize that like behind all of this stuff are people that are working hard and putting things out into the world and being creative. But yeah, we ask for samples on everything. Obviously, I have to recognize I'm not the target consumer on each brand we work with. The ones that I do align with, I'm like, oh, we have to do this deal. I like totally get this product. But you have to get out of that mindset of like, oh wait, I'm not the only person in the world. Like, there's a lot of people that are very different from me that make good decisions and are out there and doing things too.
Or even if it's a product for like babies or mothers or something.
Yeah,
like that.
I mean, I obviously can't do either of those things. So that being said, I will like ask, my wife and my kids, like if they like stuff, and obviously that's anecdotal. And that's where like, okay, these numbers do matter. Sales matter. Like they're pointing to product market fit in the world.
Yeah. I like what you were saying about that there can be like, you can be a guy or girl that likes numbers, but also be really relational. Like sometimes when you think of like accountants and stuff, you're like, oh yeah, they're just like desk monkeys or whatever. And yet like I know a lot of the people even in our family or our circles are kind of a mix like you, where they are highly relational, but like love to think through strategies and numbers and like profitability and all those things. So I thought that was really interesting what you said about that.
Yeah. And I don't mean to throw shade on like all of banking and like the people that I worked with were great. It's more just, it's the ladder that you have to climb to get to the space where that job becomes relational is a lot harder, and lower on the totem pole, if you will, is a lot of, screen time.
Yeah. It's a totally different world. And I can more so relate on kind of the real estate equity side and those types of funds. And there is certainly a relational portion of it that's very important. And there's a lot of trust and volatility. But at the end of the day, it's about the return, right? And people want to see the numbers. And if the numbers aren't worth their while, then there's no differentiation between them just investing in the market per se, right? So I totally understand what you're saying. I did have a curious question because I know, and I like the illustration you use in terms of your filter where you cast a wide net, then you narrow it down. That's a conversation based off of like inbound opportunity from just an industry as a whole. Are there key kind of market trends right now, whether or not it's AI? I mean, we hear about Chat GPT, et cetera, that you guys are saying, hey, this is a space within what we do that we need to focus on specifically and find startups to get behind early because there's a great opportunity. Are you guys focused in that regard as well, outward?
Yeah. I think zooming out, like all of VC, it's very interesting to see where it's going because you have AI. Everyone's really interested in that right now. Like it was the metaverse, right, during the pandemic. That's kind of gone away a little bit. Everyone's very interested in AI. You have this new technology that's coming to market. Super interesting. As a whole, the industry is shifting towards that profitability model, right? Like the economic landscape's changing and people are wanting to see sustainability and be like, okay, we used to value everything off of top line revenue and how big is this business? Now people are starting to value things off of the bottom line and say, how profitable is this business? Can we, sustain a downturn if there's not more capital to go in and keep growing this business? So that's like a macro trend.
And how does AI affect, because you said consumer goods, like how does that affect that industry?
So yeah, I'm not drawing a hard line between those two. I'm just saying like the VC world is starting to focus on AI. Everyone's starting to focus on profitability. That's true in consumer as well, and really want to see sustainability. It's interesting. VC investment in like D2C, direct to consumer, is actually down in the last year, but D2C sales keep going up, and so we're like very happy to deploy capital and stay active in that world. A lot of VCs are focusing on their portfolio, not wanting to deploy into new businesses and kind of take on those additional risks, just given the overall landscape. But so that's really interesting. The shift towards profitability, I'd say, is a big trend that's happening, and the fundraising market is changing because of that.
Huh, interesting. What would be something that you would, somebody that's wanting to be an entrepreneur, maybe has an idea, wanting to start a business, what would be some like advice that you would give someone like that from your point of view?
Just know what you're signing up for. Like, it's really hard. I think being your own boss sounds really cool, and the influencers that we all look at and admire. It's like, oh yeah, they started their own business. They're doing this. They're doing that. It's a lot of work, and there's a lot of competition out there. And so trying to come up with a fresh idea that is going to resonate, it's always going to happen. Like there's always innovation, and I love to see what people are coming up with, but just kind of go in eyes wide open. Like it's not an easy road as an entrepreneur.
Yeah.
We use like the sports analogy all the time where, you look at Michael Jordan or LeBron, and I bring that up because you and I have a feud on who's the GOAT. But
one's still playing and just got the highest record in the NBA. Yeah, keep going.
Podcast to argue it's Michael Jordan. It's not a question. But anyways, you see their successes, and that's what we see in the public eye. But nobody realizes to the full extent on how hard it is, the hours put in, just those times of turmoil, injury, just like the mental exhaustion, the physical exhaustion. And it relates here to starting a business and owning it. And we all have inner circles of people who are like that. It takes a certain type of personality. And even still, as you noted, people are wired differently. So they may be very successful, but when they walk in a room with VCs like a Luke or whatever, there might not be a compatibility there, which isn't a bad thing. But it's just another hurdle to go through to find another source. So
yeah,
I totally understand that.
Yeah, that, and you have to wear all the hats at the beginning, right? Like, and that's a skill in itself. And as the business scales, like that, changing what type of leader you are or like what your responsibilities are is a really hard task, I think. Kind of relinquishing that and hiring on people to take things off of your plate.
Yeah. And I think in a world where like, especially this like younger generation is seeing mostly the, highlight reel, right? Is, the failures, they talk about like how many failures that you have to chalk up to that one success point, is something that you have to be comfortable in, like being like teachable, probably like be able to morph and grow and whatever.
Be comfortable.
Yeah.
Being uncomfortable.
It's probably why, that's true. And it's also probably why, like you mentioned this, Luke, earlier on in the conversation about more people wanting to like just get to a point where they could sell it and like make that money, because like maybe they're burning out too. Maybe it's not just like, oh, I want that paycheck as fast as I can. Maybe it's also like, I don't know if I or my family can like sustain this momentum or something.
Sure.
Would you agree with that?
Yeah. Again, I think like the idea of sustainability is really important, and that's from like all aspects. Like, it has to be a sustainable product in the world, right? Like, that's table stakes now. It has to be sustainable from like a unit economics and the financial viability of the business, and then has to be sustainable for the people that are running it and the person that's behind it. And so I think even from that point, a lot of the news in the VC world revolves around fundraising. It's like, this company just raised this huge amount of money to go out and make a bigger business, and they raised it at this valuation, and the company is growing. What a success story! What you don't hear a lot about, and what I think is really interesting stories, are the companies, again, that aren't going out and raising a lot of money, but they're growing profitably and sustainably, and they're able to exit at a lower valuation, but they didn't give away their business in the process,
Right.
and they didn't kill themselves trying to appease all their investors in the process.
Yeah.
You can be smart about
The
who you
red
take
team.
money from. Obviously, that's a privileged position to be in, but it's something to definitely consider if you're, going to raise money from someone. Know who you're getting into business with.
Yeah.
That's a great point. I did have a curious question for you, because I can imagine, and going back, I mean, you go through your career, you're on the finance side, you come over to this VC side. Do you remember the first deal you ever committed to, got behind financially, and said, okay, this is it. This is me entering this space, and what that felt like? And
Yeah. Was there like an emotional
I'd
connection
be
to
so
it?
nervous.
Well, I could answer that a few different ways, I guess. I'm working in banking. I'm making money for the first time, and my friends are also early on in their careers. And I had a friend that was at a fintech, and he was early, and he was like, "Hey, we're gonna raise more money. Do you want to invest?" And I was like, had no idea what I was doing, and I was like, tried to act smart, tried to get on a call with the
Hope and I are doing right
management
now.
team, and
Yeah.
ask questions, and I'm like, I don't know what I'm asking, and anyways, I end up doing the deal, and ends up being like a home run. It's great business, still in the
Oh,
market,
nice.
and I'm like, this
This
is
is
easy.
easy.
Yeah,
Yeah, yeah.
this is amazing. So then I like, the emotions are like, oh, this is awesome, and then that's really what like got me thinking, like, maybe there's a different way to go through my career, and not all of them have been happy go lucky stories, but that one definitely got me kind of thinking about things differently.
Yeah. What's like a larger lesson around like maybe your first company you invested in that like ended up flopping?
Yeah, the one that went sideways, really, it's kind of funny to bring this up after this whole conversation, because it was one that I based like solely on relationship. I was like, oh, I
Oh,
know this person, like,
Forget
and
everything
it,
you previously
yeah.
said. It's all about
Yeah.
numbers.
Yeah. Yeah.
yeah, exactly. Well, it just like that clouded my um, decision making, where I was like, yeah, numbers aren't great, but like, I know this person, and even like winding down the business, it ended up working out okay, but um, it just was like lesson learned, kind of in a similar way of like, don't just base things off of feel good vibes. Like,
Yeah.
Keep it
do your
balanced,
homework.
right?
Yeah.
Yeah. You got to
Do
cut.
you like hesitate in investing into people that you know really well? Like, do you have like some kind of internal personal line there, or not really?
Not really. I'm like, I wouldn't put a substantial amount of money, like like me personally investing. I'm like, I want to participate with my friends, and like, if it goes
Yeah.
down, then like, we'll do it together. I'm not gonna, put all my eggs in one basket, but I want to take that ride with people I know.
Yeah. Totally.
That's great.
Yeah.
Well, I'll end on this, and you might not have a different answer, but if it wasn't doing what you're doing right now, in the space that you're in, and you could start your career path over, is there anything else you'd be doing potentially?
Oh man, I'm loving what I'm doing these days. I think it would be not too dissimilar. Yeah, I don't have like a crazy otherworldly dream, but maybe living somewhere else or something.
You're actually that's a tough person to ask the question too, because I feel like when you come to work, it's something different every day.
Yeah,
right? There's not
true.
a one product that you're trying to scale, trying to get people to buy into. You're seeing several thousand different things a year.
Yeah, it's pretty entertaining. You get to meet a lot of different people, and
you're trying it all out. It's
yeah.
I actually think if I answer that question, I'd say you. So
Yeah.
I'm glad we did
maybe I'll start a podcast. That's
yeah.
Oh, there you go.
Well, you've done great.
Seems like it's so fun.
Yeah. It's been great, and we won't take up any more of your time, but appreciate you joining us in the family, if you will, and we'll definitely have you on again, Luke.
Well, thank you guys.
So today in the house, we have our resident fitness guru, Angeles.
Hey.
Also newest to the family, and the one with the most grace to all of our craziness. And then also
newest to the family.
Yeah, that's true. She doesn't know yet.
Give me some more time.
Yeah. And then also big brother Stet, the only boy in the OG family. We call the others the antis. We'll get into that another time. But he works at a renewable energy company. He is a what are you?
Managing partner
at D3 Energy. And we invited them today here to talk through Luke Tubergen's interview with Ember Funds.
Yeah.
Oh, wait, before we start, also, it's house rules. Number one, we're not editing this, so what you say goes. If you say something stupid, that's on you. Number two, no interrupting unless what you have to say is more important than the person that's speaking.
Right. And the reason why we're not editing is because we don't have the capabilities yet to do that.
We do. We just don't have time. And also, yeah, man, what do you say goes? All right. Did you guys actually listen to it?
Yeah, that's question one.
Yes, successfully. We listened to it.
So it's interesting for the world of venture capital, and Stets and I specifically, we talk about all the time, is when I think about VCs, I think about Silicon Valley, these big tech startups, almost like completely unrelatable to anything I would ever do. And ultimately would not know the steps needed to be taken to even get in front of these guys. So did you guys find it more relatable when Luke talked about it, how it was some of these warm relationships just through networking and just naturally having these conversations with him? Or did you still kind of leave there being like, how the heck, based on what I do, would I even get in front of these guys?
You know, what I took away from it is really the whole relational side. I mean, that is so true, because maybe, you know, you have people who he's met with in the past and it's like not a great fit, but love the person. And then they're going to keep innovating, coming up with ideas. That's what these entrepreneurs do, right? Mm-hmm. So keeping that relationship alive, if it's good, you know, and they're like, hey, I've got something else to hit you up with, then, hey, maybe, you know, 5 years down the road, that's the thing. And that's the ticket that they want to go ahead and invest in. So for me, the big takeaway was just keeping those relationships. Like, it might not work right now, but in the future, it definitely could be a possibility.
Yeah.
Well, the other thing too is like, and Luke didn't necessarily dive into it, but the hit ratio for like successful investments isn't outstanding. It's like 1 in 10. So to your point, you got the relationship, you trust each other, you know they're smart people behind the product. This one didn't work. We ended on good terms, but please be the first. Let me be the first to reach out to for your next one. And hopefully one does hit in the future, right?
Yeah. And, you know, all the people who are entrepreneurs, like, usually it's not their first idea that's the hitter.
Yeah.
So
it usually like the 100th. Yeah, totally. Yeah, honestly, when I listen to it, all I can think about is Shark Tank. I don't care if you guys make fun of that, but when he talked about the people and the numbers, when you're watching those episodes, you really do, like, some hit harder because of the numbers.
Yeah.
And some they're like, no, that person definitely knows what they're talking about and they can add their value there or whatnot.
Yeah. It was interesting to hear from him, you know, that unique blend of the relationship, but then the company /product and being able to you got to have one, but you need the other one as well. And so
Right.
he had talked about some companies that he kind of fell in love with the relationship, but the product company wasn't there.
Yeah.
But then on the flip side, you might have a great product, but if you don't have the right mind that can drive that product and drive that company, you're always going to fall short as well. So I think it's finding that perfect blend of each.
Which one would you take more of a risk on, people or finances?
I'd probably take more of a risk on the finances. If I felt like I had a real winner of a human being, of a leader,
Yeah.
I would venture to say they're going to figure it out, right? Take up Elon Musk. Like, he might have failed on his first couple companies, but he was going to figure it out with something eventually.
Yeah, that's a good point.
No, I agree with that. I think you have to have, I mean, the numbers ultimately have to work at some point,
Mhm.
you know?
Yeah.
And when on the VC side, you're so early on in the process usually that a lot of it's projection based, or there's just like a small sample size of, hey, this is the success we've had at this scale, where we've hit a glass ceiling, we need to go here. And you can pump as much money as you want into a concept at that phase of the business cycle. But if the leadership and the person behind it doesn't have the ability to manage it at that scale or have the vision,
The clear vision.
It's
I was
not
going to
gonna-
say that
yeah.
because there's been companies too, like just from entrepreneurs that I know that I'm like, the vision is so scattered right now and they're getting that funding. And it's like, at what point? And also their user base is a smaller base too, but they have to make these projections look
Right.
outstanding and like, you know, because you want people to believe in this dream.
Yeah.
But then when it's not working on those projections, you're not hitting them. It's like, okay, do we pivot? That's like the scary part of it all. And then you've got the investor side being like, what's going on?
Well, and how do you successfully pivot, right? That's somebody who understands what they're doing. It's like, hey, we've gotten this far.
And sell it.
Right.
It's the right move.
Well, that was gonna be my next question. So Luke brought it up where you have the entrepreneur who's in it for the long haul. So they might get to a successful point and then they sell off a portion of it,
Yeah.
but they stay in the business.
Yeah.
And then there's the other one who's trying to get, inflate the valuation as much as they can and get out and sail into the sunset. Where do you guys fall? Would you rather be in something for, the passion long term, or would you rather just take the nice chunk of money and sail off in the sunset, like I said?
If your answers are different, this is going to be hilarious.
Right.
Yeah, it's true.
I'm interviewing you right now for an idea.
Yeah.
I'd probably like to be somewhere in the middle where you take a payday, but still have an involvement with the company as it
Yeah.
continues to
Like
grow.
49% or like 51 where you're still having like mostly control.
I'd like to try to keep 51.
Yeah. Yeah.
No, but I think that I'm with you there where it's somewhat of a split just because then you get that little bit of the payday. And if you love doing this and investing in different companies and finding it, then you have more capital to work with.
Yeah.
So you get that. And obviously, you're hopefully believing in it at that point.
Well-
If not, you're like, I'm out.
Going back to your Shark Tank analogy, at least from most of the episodes I remember Shark Tank, a lot of times they were talking always about taking equity in the company.
Yeah.
What Luke said kind of sounded like a different take on the VC world.
With the debt?
is
The debt
that
side,
it's,
too.
It's mostly a debt side.
Yeah, he plays on both ends.
Yeah, I had
And
questions
then
about that.
Kind of said he earned the equity with bringing in either network or experience, things like that. So I'm curious how that works out and it's probably on a case by case basis. But
Well, and he's
they're
also
playing
like
bank
retail,
and
right?
investor.
Is that
So-
more intriguing to play the debt?
Yeah,
side
I
of
mean,
it?
I guess so. I would say you're not having to give away equity of your company,
Mhm.
right? But on Luke's side, then they're really kind of more acting as a lender at that point. So I'm
Yeah.
I'm curious of the
Well, it
dynamic
can
between the two.
mitigate. So I'm not going to speak on Luke's behalf, and we'll get him on again. But if he's on the debt side, it can mitigate risk for them on the front end. So, sorry, if they needed to, like I said, if it was a clothing company and they just needed to stock up on product and they just needed essentially a line of credit or whatever, if you will, and they gave a preferred interest on the front end, debt always comes first and in the capital stack.
Yeah.
Luke's guaranteeing a return. And then on the back end, as it transitioned over, it said, hey, it's contingent upon if your success hits this hurdle, then we roll over to an equity play and we
Yeah.
get first right of refusal. I mean, that's a great strategy. I don't know if that is their strategy,
Yeah.
but it is an interesting dynamic. And then on top of that, I always kind of weighed out the pros and cons of what is stopping an individual from just getting a traditional line of credit or loan from the bank, and what's pushing them over to the VC side?
Yeah, why would they need that from the VC world versus a bank?
Aside from just the expertise, right? And I guess that's the big part of it.
And like connections, and things like that.
Yeah, like the Rolodex.
Absolutely, yeah.
Yeah,
You know, it's like, oh, I'm involved in XYZ company. I can kind of introduce you, and so many people that they work with.
But does that mean that the lending like percentages are more than a bank?
It depends. That all depends on the risk. I would say for a startup, it's going to be pretty tough to get a large, non-collateral loan from a bank, where a venture capitalist usually has a lot more of a higher risk appetite.
And like flexibility too, probably.
Yeah. So a bank's going to be a little bit tougher to get any kind of, so that I think that's where like a Luke's company can come in, has a larger risk appetite, can provide that debt.
And that's why that hit ratio is, the success stories are not as high, but when they do hit and when they're in that early, the return is, much higher in multiples than a traditional loan. So
than the bank.
Well, and a lot of times with these companies, depending on the type of company, but especially like a product company, like it sounds like they focus on, those early stages, you don't need a lot of cash flow as you're kind of organically growing and coming up with this, product and everything. But it's like to kind of go from like those infant stages to then that $1 million in revenue, like you talked about.
Yeah.
That's really where you're going to need that influx of cash for marketing purposes, for hiring sales guys, all that kind of stuff that flows.
It's like that's the pivotal moment where it starts to get a little bit heavier for
your
that
burn rate is just accelerated, and you're just trying to, feed the machine to grow.
Because correct me if I'm wrong, but he said they have to have at least $1 million in sales, right?
That's
what he said. Yeah, that was his. Yeah.
Yeah. So they're getting in a little bit later stage than like as, early.
Mm-hmm. Yeah.
But like I know from our experience as we've grown, cash flow is a major stressor for any new company, because as you grow and think for these product companies, for example, like they've got to put cash out to get these products, to be able to make them, to then be able to sell them. So you start to run into this wall where like, hey, we don't have the cash to be able to purchase all of these products, to be able to make them, to then be able to sell them. So there's sometimes that gap that can be a challenge.
Yeah.
So I want to switch gears and get on the creative side, because you guys are both familiar with the fitness industry. And when Luke was talking about these products and just, he's got clothes, like I said. I've seen like floaties in his pool one time that look like pizza slices, and he just sees all these creative things. I think the fitness industry has seen a lot of innovation in terms of product or just consumer-based items. Has there been anything you guys have come across over the last couple of years where if you had the capital or had the opportunity to invest in it, you would have been all about it? I think energy drinks might be one of them for you guys, but does anything come to mind or any crazy ideas you guys have had that
outside of like protein and like the basic baseline, like innovative?
Peloton,
Well, Peloton was a great idea, and then
we talked about it.
Yeah, but if you got in early on that and believed in it, then people probably made bank if they got out.
Yeah.
I don't know if tonal, you guys both have the tonal, like that's
big tonal fans.
You could probably tell.
Huge, right? But that's another like huge one that's like, wow, just it completely, and also the marketing on it. We just talked about the marketing dollars.
Right,
like some of these companies, it's like, now a tonal's a different story, but if it's a product that is easier to make and a lot cheaper to make, in order to get your product out there and be like just a little bit different, it's got to hit the marketing side a little bit differently.
Yeah.
So whether that be through social media ads or trade expos or whatever, it takes cash.
Yeah, totally.
And the marketing component has completely changed over the last, call it, 10, 15 years with social media.
Yeah.
You think of when we were growing up, it was infomercials, right? The shake weight or something like that.
That's totally inappropriate. Totally inappropriate that you went right there.
And now it's all about influencers driving products and who's using it and who's wearing it and all that kind of stuff.
I've been telling Angie about an influencer I follow that is focuses on postpartum women, and she blew up and has her own all XYZ things.
Yeah.
But it's like she just totally talks about your core and all the things that happen as a mom and you're growing a baby, and it's she blew up.
I also thought it was interesting. So going back to tonal is, we were the COVID adopters of fitness, right?
You were.
Where we went to the gym, everything shut down, and then we pretty much made the home gym and
tonal was part of that. But now that we've come out of it, I feel like there's two camps, right? Where I, and maybe Hope and your family, your husband, Steve, I'm like, I'm never going back to a public gym. I like all this equipment. I'm into it, the tech part of it. And then you guys like going to the gym.
Oh, I love it. Yeah.
So it's interesting to see, regardless of the marketing, just like the social component of it will still influence you in different ways. And I still love tonal though.
I know you do. It's really interesting, all the data that you can collect from it. That's what I love about it. But for me, like going to the gym it's an experience. It's an event.
Yeah. So I have a question with what Luke was talking about and the ups and downs and the roller coaster of, those guys that are starting their own stuff. Angie, you've competed professionally in the bodybuilding world and have seen as you've overcome and gone through like ups and downs, like how would you connect that to your career and like comparing it to, kind of the same roller coaster that some of these
the hard work.
Yeah. Entrepreneurs would feel.
Yeah. I mean, from the entrepreneurial side, for sure. If it comes to the competing aspect, you're going to lose more times than you're going to win. That's it. Like hands down, unless you are, the top person. That is something that you need to understand. So you need to have thick skin. Also on the competing side, you are being judged and evaluated. If you're an entrepreneur, your company, your product is going to be judged and evaluated too. So it's one of those things where it's like those highs, they're going to come every now and then, but they're few and far between. But the effort and the work, the day in, day out grind that comes with it, those are probably very, very similar.
Yeah, and you can't hide results.
Yeah.
It is what it is. And I think that's really relatable.
We talked about it in another interview too, where there's just that phase, and this is like the fitness analogy, where you work your butt off and you don't see results. And you get to that point of like, why the heck am I doing this?
Yeah, do I jump out?
Pizza, I want to go drink a beer and like it's not worth it to me. But it's like breaking through that threshold.
Yes.
That is crucial to ultimately.
Gotta hang in there. Yeah. Like if you don't hang in there, I tell people like the magic is about to happen. Like keep going. It's only been just like a little bit of time, you can't just give up before. And that's why a lot of people, for fear of failure, is why they don't start. I know there's been things in my life, that we've even talked about where it's just like sometimes like the fear of failure and getting started and the time and the effort. Do I want to do that? So you have to be so passionate about it.
Yeah.
When you're going to begin.
That's so true. Stets, you've been a part of something from the ground up. Would you see any benefit with tapping into that VC world? Or like challenges? Like what are your thoughts around?
Yeah, I think I kind of mentioned that earlier. I think that